So you want to buy a home, but you don't have a lot of money for a down payment, but you still want to be able to get a loan in order to finance the home. You keep hearing people talk about this USDA loan product. So what is that? Stick around. We're going to get into that today. Hey, what's up guys? Welcome back to the channel. It is your realtor, Nick Isgro with eXp Realty here in Central Maine. Today we're going to get right into what is the USDA loan product, how do you qualify for a USDA loan product, and what does it mean for you when you're in the buyer's market. Now before I get into that, I do want to welcome you here to the channel. If you've never been to the channel before, we do cover all things real estate here in the state of Maine, particularly in the Central Maine market. If that is of interest to you and adds value to your process in the buying and selling of homes or just common knowledge of the market here in Central Maine, please go ahead and do me a favor, give this video a like, hit the subscribe button, knock that little alarm bell. You'll be notified every time we put out new content. So you've heard people talk about the USDA home loan product, and you're sitting there thinking, wait a minute, I thought the USDA, US Department of Agriculture, was interested in things like the food pyramid or food safety or inspection of food plants. Well, they happen to be in the home loan business too. Why would that be? Well, in short, the USDA believes that helping families in rural areas of our nation does actually help build stronger communities and better quality communities for those places. Now, think about where most of your food comes from. It's coming from those rural places, so they want to have an active interest in making sure that home ownership and strong family roots are still affordable and available to all people in those areas in order to create a better fabric of society in those areas. So what is the USDA loan? Well, the USDA home loan is a product that helps low-income families in designated rural areas obtain home ownership by using competitively priced home loan products. That means that the USDA backs these loan products in the same way that the Department of Veteran Affairs backs the VA loan or the Federal Housing Authority backs the FHA loan. Very similar, so banks that are working with the USDA loan know that it is backed by the full faith and guarantee of the United States government, which is, by the way, why somebody who may not traditionally be able to afford home ownership is able to get this loan product with really no down payment. We'll get into that in a little bit, as well as competitive rates. So the USDA offers essentially three main loan products. There are USDA direct loans, which these are loans that are issued by the USDA to qualifying low-income families and home buyers with interest rates sometimes as low as 1%. The second kind of product would be the USDA loan guarantee, and this is probably one of the more common products that you're likely to see on the market. This is a loan that is offered backed by the USDA, but offered through participating lenders to qualifying low-income individuals with extremely low down payments and very competitive interest rates. Lastly, the USDA offers USDA home improvement loans, and these again are for qualifying families and homeowners to get a loan that is specifically geared towards making improvements on the home that might be necessary. All right, so let's talk about qualifying for the USDA loan. Well, first of all, you do have to be either a US citizen, a permanent resident alien, or a non-citizen national. So you have to have some type of permanent, semi-permanent, acknowledged status here in the United States by the US government, obviously to get a US government-backed loan. So as far as location, we did say this is more of a rural development loan. This is also known as the USDA RD loans. You'll see them listed that way sometime. So it does have to be in a USDA designated rural area, which is typically going to be in a fairly rural area that's somewhat self-explanatory or really on the outer edge of those suburban areas. And there is a website at the USDA. You can go there and look at the eligibility requirements. I think you can just actually type in the address if you're on the right loan type, and it will tell you if that area qualifies. But if not, honestly, go speak to your participating lender and they will be able to walk you through that process. And I can tell you, here in Maine, by the way, it's a rural state, and I'm not sure how it is down in Portland, but I can tell you for the rest of the state, it's probably going to qualify. I have worked with rural development loans in town in places like Fairfield and Waterville and other area places. Obviously, places like Albion, Clinton, China are going to have a little bit more of that rural feel, but even in town in some of the places that we here in Maine might consider to be a little bit more suburban, is likely going to qualify because Maine is in general known as a rural state, and these aren't like really huge cities. By and large, very likely that you're going to qualify, at least for the zone and where the house is, if you are working with anybody here in the central Maine real estate market. All right, so we talked about low income. USDA loans are qualified based on economic need, and part of the qualifier for that is that you cannot earn with your adjusted gross income any more than 115% of the median income of the area you're in. That's important to remember. Not the average income, but the median income. You can't have more than 115% of that in order to qualify for the loan. Now, just like any loan, you do have to demonstrate the ability to pay. And in this case, with the USDA loan, what they want to see is that based off your income, your assets, and anything else that plays into your financial picture, that you're going to demonstrate the ability to pay at least 12 months worth of payments on the loan. They want to verify that that's available to you. Again, work with your lender for the details. I'm not a lender, I'm a realtor, but these are just some general guidelines to go by as you're thinking about going for one of these loans. Now, of course, one of the pieces of your financial picture is going to be your debt to income ratio. It is often recommended that to give yourself a qualifying chance that you have no more than 43% debt to income in order to qualify for the USDA Rural Development loan. But as always, you want to check with your participating lender because this will vary from institution to institution a little bit and person to person based on the rest of your financial picture. This is one piece of the puzzle that we're talking about here. But in general, you want to have your debt to income ratios under control, or at least under that 43% threshold. Now for credit score again, this is going to credit score again is going to be one of those things that is lender specific, but in general, you want to have at least a 640 or above on your FICO score. All right, so now you've heard about the USDA loan, you've gone to the lender, you're looking at the qualifications. What about the down payment? Because I mentioned on the front end that this is a loan that requires no down payment. And understandably, it can be very difficult to come up with that 20% down payment, 10% down payment that is often required for a conventional loan, although some do require a little bit less. The FHA loan, as you know, requires typically 3.5% down payment, and even that sometimes can be a stretch for those who still want the benefits of home ownership but are trying to find their path to get there. They just don't have that amount saved up in the savings account. Well, there's two kinds of loans that you can get that require zero down payment. One is the VA loan, Veteran Affairs, and the second is the USDA Rural Development loan, requires zero down payment. So that's important, but one important piece that you want to remember here is that you still are going to be responsible for closing costs. Now, as always, these things are always a little bit negotiable when you're looking at buying a home and you're looking at the purchase and sale contract. Oftentimes, what my experience has been is that buyers that are coming in with a USDA loan, if they don't have the down payment, oftentimes they don't have a ton of money for expensive closing costs. Closing costs often on an RD loan, depending on the price of the home, assuming it's, you know, in that 150 to 250 type range, which is be a good starter home in the central Maine area. You're talking, you know, probably about $5,000. They're a little bit less typically than a conventional loan, but still, that's a lot of money. Oftentimes, the buyer will put in the contract that they're asking the seller to cover up to $5,000 of closing costs on the rural development loan. Now, needless to say, here's a piece of information that's very important for you to know, and that is we are in a very tight, competitive market right now. And this is not going to be your strongest loan product going into negotiations. One tactic that I have seen rural development loan applicants try to use when they're trying to negotiate that purchase and sale agreement is they will offer basically $5,000 more, or whatever amount more they think the closing costs are going to be, more than they were originally going to offer, and then ask for that back at the closing if you don't have the closing costs. Otherwise, if you have the closing costs, great. Just remember, it is going to have to stand up to appraisal, because if you have no down payment on the home, then there's really no flexibility when it comes to the appraisal process, because it's not like you have that extra cushion of cash to pay for the appraisal gap. And in a market like this, where people are generally able to get a little bit more than the asking price or right at the asking price, it is something to consider. But that's really where you and your relationship with your realtor comes in. Your realtor is there to be the expert in the market, and your realtor is there to pull the comps, or they could actually run a CMA. Typically, if I'm putting an offer in on a house, I'm gonna run a CMA for my clients anyway to make sure that my client is aware of what the current market value is of that home. Whether they want to offer more or less is up to them, but we always like to have that information. So if you are going to offer above the asking price with USDA loan, remember it is going to have to meet the appraisal requirements. So ask your realtor to run the comps and make sure that the value, or at least the expected value, is there when you put the offer in. Now, outside of value, the USDA loan, like other government-backed loans, does have a few more twists and turns that it might take, because there are some things that they want to guarantee that are going to be working in the home. Things like the roof and the heating systems are going to have to be up to code, can't be any broken windows, anything like that. The USDA appraiser will be looking for things like insect damage, and they'll want to make sure that the well and septic are up to code and up to use as well. All of these things will be covered typically under your home inspection as well. We always recommend getting the home inspection because that's really for your information. The USDA appraisal is not a home inspection, but they are going to check on a few more things to make sure that they're in good working order that a conventional loan just might not require. So in summary, guys, the bottom line on USDA loans is that these are a great product for people who live in designated rural areas, don't have a lot of money for the down payment, and really want to be able to get into the field of home ownership. This is really a way to do that where you can qualify. Yeah, you're probably going to end up paying some closing costs, but no down payment, very advantageous interest rates, still a great product in the long run in the grand scheme of things when we're looking at how many people these loan products have helped achieve home ownership who never would have qualified otherwise, and give them that leg up to move forward into the rest of their lives of home ownership. Now that's really all I have for you today, guys. I hope this was a great summary of the USDA loan. A lot of people are very unfamiliar with this product, even though they've probably heard about it, they've heard different things. Always speak with your local lender. If you are unsure of what lender you want to work with and you happen to be here in Maine, in the Maine market, please give me a call, shoot me a text, drop me a line. You can even put something in the comments, guys. I will go ahead and send you a private referral. I work with a lot of great lenders and would be happy to connect you with someone who is very familiar with these products and can go over them in detail with you if it's something that you think you are interested in. Now, as always, guys, if you're in the market, if you've had experience with this before, I would love to hear from you. Drop a comment below. Other than that, as always, guys, I thank you so much for sticking around to the end of this video. Again, my name is Nick Isgro. I'm with eXp Realty here in Central Maine, and until next week, I'll see you next time.